The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, time to check in with CoinDesk Global Policy and Regulation Managing Editor Nick Day, who's also the editor of CoinDesk's The State of Crypto newsletter. Good morning, Nick. So the U.S. Fed is opening up a pathway for crypto banks to tap the central banking system. What's going on?
Good morning. Yeah. So yesterday, the Federal Reserve published its final guidelines for basically explaining how banks and novel non-bank entities with financial charters could get access to the master accounts and to the global payment system. And this is important because a lot of crypto companies are currently, or some crypto companies are currently trying to become, basically full-fledged banks. If they are able to get master accounts, they're able to provide the same kinds of banking services that, for example, Silvergate or Signature currently provide. And it will give them the opportunity to bypass, these intermediaries. They don't have to find banking services of their own. They can be banks for other crypto companies. So what the Fed did is basically created a 3-tiered structure and outlined certain principles that it's looking at and said, all right, well, if you are a, full, bank, you're covered by a federal regulator, you have federal deposit insurance, then we're going to subject you to a little bit of scrutiny, but not too much. On the other end of the spectrum, if you are a not federally regulated entity, you do not have deposit insurance, and this kind of sounds like banks that we've heard of, such as Custodia and Kraken Bank out in Wyoming, then they're going to be subject to the strictest level of scrutiny. And both of these companies have already filed for master accounts. We don't know what the status of those applications are. They've been sitting in limbo for the last year and change. And really, what yesterday's news suggests is that maybe they're going to be a little bit closer to actually becoming banks.